Well, good day, all. Ira Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening, as we're now on April 30th, 2025, the end of the month. And the time, well, we're just after, I think it's 7 p.m. Central Time. Let me check it for us right now. Yeah, just after 7 p.m. Central Time. So let's come back, if I could, over here and talk to you about the markets. Gold has taken a beating tonight, down $37. We're in the silver market about unchanged, so the silver-gold spread's wandering around all over. Copper, while it's up 135 points, it was down dramatically today. I think it was 25 cents, so 2,500 points. You're up very little, and you're about unchanged in the platinum market. Now, the day started off, and I think you realize that, with GDP number coming in a surprising contraction, down 0.3% when the market was looking for it up. That didn't happen. We then saw that the ADP numbers were terrible. Only 62,000 new jobs, half of what the market was looking for, and you took the stock market down. Late in the day, and I use the word late in the day, the market recovered. Just about everything it lost, with some indices closing higher, going into the Meta and the Microsoft earnings. Let's leave it there and take a look at what we have for tomorrow, and then I'll explain. Tomorrow we're going to get the Challenger Group, and they're going to come out with their planned job cuts at 6:30. We get the weekly jobless claims. They're looking for 225,000. That's at 7:30. At 8:45, S&P Global Group gives us their final April manufacturing sector PMI. The ISM will tell us what's going to happen with their manufacturing sector indices. That's at 9 in the morning. And then we get construction spending. Now, I don't know if that's going to be good or bad. Caterpillar did not do well in its earnings call. Big items aren't selling that well. And we'll see if that's going to drop off, and we get the natural gas storage. So that's where you're at. But the story in the afternoon was the earnings that came out in Meta and in Microsoft, which were blowaways to the upside, more CapEx spending and the like, which has lifted all the stock market, and it's taken out the fear. So that's causing the gold tonight to drop back a bit right here. That's how I'm viewing it. The dollar not getting that big of a bid off this news. It's up 18 points. That's not very much. We are still looking at a mixed amount of, in the Swiss franc, the euro, I don't see anything big going on there. Mexican peso is basically unchanged, and the Aussie's up a fraction. Bonds and notes, very stable off of all this news, and you were down very hard in the energies. Look, you're at 58.25. That's up 4 ticks from where you closed. So we've cracked that 60 level in the market. And by the way, there is some more energy coming on the market. I'll talk about that in my financial update. So when we look at the gold market, on a weekly basis, this market's still bullish on the weekly chart. Nothing here to damage it at all. Supports 29.65, which is a long way off. That's $300 away. That's a long way off in this market. When we take a look at the chart here, you can almost draw a downtrend line and then a sideways line here and call it, okay, what's the market forced? It's got a wedge. Is it going to break out to the upside over it or under it? We'll see what it does in the pattern, but that's what you have there. The pattern on the swing line is bearish. You have a pattern of lower highs, lower lows, but again, you're over the 18-day average, so the bias is up, and the first target for the market is the 18-day average, and that's where I would think the pros want to make a stand on the long side. Doesn't mean it's a buy for trend traders, but that's what I would expect to see the short covering area. Obviously, the market had been running the Bollinger Band. It's losing that. So expect these bands to now do this. They're going to start wrapping around the market in that manner, because while you're dropping down, you don't have that runaway volatility one-sided, and that will affect how the Bollinger Band looks very, very shortly. It's happening already now. In momentum, you're down. And when you lost the bullish embedded reading, I have been telling you every night since it occurred over a week ago when you were up here, I thought price and the 18-day average would make a run for each other. I didn't think you would take that out. And I also said I don't expect a deep break because so many people don't know what to do with with what's going on with the tariff war. And I think that's how the market is unfolded. The gold-silver ratio just keeps fighting right at the 18-day average of closes. I left it colored in silver. And in the silver market, you've now targeting and you're into the 100-day average of support. The 18 and 200-day is very possible at 32.09. But that from here is 70 some odd cents away, about 69 cents away. So we'll see if that all does anything. Again, trend down, bias up. Why is the bias up? Because the market is over the 18-day average of closes, the red line. When the market's over that, that's my upside bias. Under it, that's my downside bias. It's also a target if you have an embedded reading that loses it, and it's often a support zone if you've been above it and the market pulls back. I teach this all in my charting courses, and believe me, it starts making sense because I layer it like a domino. One thing builds on the other until you get to where you're at. In the copper, what happened today, and you can see how this market looked coming into today. Let's get rid of today. This is how the market was looking. It was overbought. I told you in all the metals, they've spent a lot of their power coming up here, and copper is counting on China. I have said that repeatedly. Well, today we got the equivalent of our manufacturing PMI. They call it factory gate. And the factory gate went under 50. That was not expected by most analysts. The reading above 50 means you're in contraction. The higher the expansion. The higher the number, the more expansion you're seeing. 50 is the delineation point. Get under that and you start contraction. Well, you got a 49 reading for the first time. China's been saying they're fully prepared for the tariff war, no problem. Now their factory's contracting. With that contraction, the market fell apart this morning. And you went to the combination, look, the 18-day average, the 100-day average, you got to 452.40. The next number could be the 446.60 level, which is the 200-day average. Don't know if it'll get there or not, but you can see what the market fell back to. And so often, what do I teach you? You go to that 18-day average. I just talked about that, and that's where a battleground begins. I wouldn't be surprised if platinum does the same. All the metals that were part of the Chinese manufacturing, what they're doing, once they start contracting, if you get another month of it, then traders will say it's trending to the downside. One move under 50 doesn't prove a lot to me other than, uh-oh, there's a problem. In the dollar, I have been looking since here, right here where I'm pointing, when you lost the bearish embedded reading for price and the 18-day average to come together. I also said I don't expect a big rally. Similar to the gold, the flip-flop of it. So I wouldn't be surprised if that's what the market tries to get to, and then the game starts anew. In other words, from there, we'll start seeing what we do. At this point, you have lower highs, lower lows, the bias is down, but momentum has turned up on you. You put it together, you come up with game plans, and that's where I want to come in with you. Because what I do in the mornings, at 6 in the morning, I put out a futures video. Every time that I put out these videos, and let's talk about them, I'm going to give you buy here, sell there, here's a price objective. The charts will look like that, by the way. I teach you the lines, but if you take my courses, all of a sudden everything just comes to you. And I do the futures at 6. I do the by design, the spider at 9. And the reason I do the stock spider, I want the first half hour of trading to get in there. The reason I do the futures, most futures trade 23 hours a day. Not all of them, but the great majority. So I can get up there and give you the news first thing in the morning to prepare you for your trading day. And the idea here is, you have your own ideas. I show you what I'm seeing on a chart, and I show you why I'm seeing it. I teach as you go. I give you an objective, a stop, and where I think the market's going, and I describe the trade. Is it a momentum trade? Is it a trade off trend? What is the trade, up or down? So to find out more, just go to iraepstein.com research. You can move your cursor to the top here. You'll see an icon and go from there. I'm Ira. You have yourself a great evening. Hope you watch the other videos tonight, and I'll see you first thing in the morning Flash Update.